The investors getting rich the fastest right now might not be the smartest people in the market. In fact, bull markets have a strange rule: confidence beats intelligence. When prices keep rising, careful thinking starts to feel unnecessary. People stop asking, "What is this worth?" and start asking, "How fast is it moving?" And the person who hesitates usually makes less than the one who just clicks buy. Because momentum doesn't reward precision, it rewards participation. Add social media, and profits turn into screenshots, stories, and viral success. That creates FOMO, the fear of being the only one not getting rich. FOMO pulls new buyers in, and their money pushes prices even higher. Now the early buyers look like geniuses, even if it was just timing. This is how luck disguises itself as skill during hype cycles. Risk feels small, because nothing bad has happened yet. Rising markets forgive bad decisions and hide weak strategies. No exit plan, still making money. No research, still making money. No understanding, somehow, still making money. That's why the reckless can outperform the careful, for a while. But momentum is like a moving train. It feels safe until it slows. The moment growth stalls, confidence turns into doubt. Doubt turns into selling, and selling turns into panic. The same speed that built profits now accelerates losses. And suddenly, intelligence, patience, and discipline matter again. Because real investing isn't about getting rich fast in easy markets. It's about surviving when gravity returns.